Hello viewers, in this lesson I'm gonna show you some exercise of accruals in adjusted trial balance and adjusted journal entry. So let me read the question first. Trial balance as of 31st June 2012. So remember, in black writing those are question, and blue writing these are answer or solution. So trial balance as of 31st June 2012, salary expense $4,800. Salaries of $800 are owed at 31st June 2012. So it means you have $18,800 more salary owed, right? So you have to just add with the 4,800 with the 800. So 4,800 plus 1,800, right? So you get $6,600 in adjusted trial balance. And you get new accrued expense, and this is a so new accrued expense is $800, which is your liability because you have to pay in future. So your liability increased, and this way your expense increased. So remember the journal of now I'm going to tell you the journal of accrued expense. In accrued expense journals is expense debit, expense always debit, and your accrued expense will be credit, which is liability. So over here we can see trial balance on the 31st March 2011. So question is bank loan $40,000 credit, interest expense. Let me tell you something. If you see the bank loan, you have to always think about the interest expense. And the question is interest is payable quoted in the 8% per annum. So you have to calculate something over here. So $40,000 is your bank loan, and per annum interest is 8%, and which is $3,200. But you have to also think about the quarter. So you have to just divide by 4. Divide by 4, you get $100. So actually in accruals, you can do actually journal first. So journal we know already, expense debit, accrued expense credit, which is over here. Accrued expense debit and accrued expense credit. So $800 will be here. So now you just increase the interest expense, which is $2,000 in trial balance. So you put just 2,800 in adjusted trial balance. So in adjusted trial balance, actually your interest expense has increased, and you got new liability, which is $800. Now this one we can see this is the accrued revenue. How we know? Because $2,000 service were performed. See, when you receive benefit, the time that will be considered accrued expense. But when you will give benefit or will perform, the time it will be revenue. So the question is trial balance as of 31st March 2011, service revenue $10,000 as credit, accrued revenue already over here $2,000. So two more $1,000 service were performed, right? So journals of accrued revenue is just opposite of accrued expenses, and so that's why accrued revenue is debit and revenue is credit. This just remember that accrued revenue is debit and revenue is credit. So now, accrued revenue, we all know accrued revenue is an asset because you will receive money or you will receive benefit in future. So you just add with your service revenue actually increased from 10,000 to 2,000. So 10,000 plus 2,000, you get 12,000, and you get your new accrued revenue is 2,000. So it increased to 4,000, as 2,000 is your new accrued revenue. So that's all. Thanks for watching my videos.